everyone, and thank you so much for joining me today. I hope everyone is having a great week so far. Okay, well, let's get started. My name is Trisha Thomas. I'm a partner here at Fourlane, and this week I'm excited to talk to you about negative inventory and how it gets in our accounting files and ways we can prevent it. So for today, I'm going to focus around negative inventory. So going to kind of talk about what does it mean when we say there's negative inventory in your QuickBooks file. I'm going to talk about ways that how negative inventory is created and how we can prevent negative inventory. We're going to look at some reports on how we can review to determine if any of our items have negative quantity on hand. And then we're going to go through some steps of how to correct that negative inventory in our accounting file. Of course, you guys know I always welcome questions. So if you'll type up those questions in the chat box for questions, at the end of the session, I'll be sure to give a few minutes to go over those questions. Okay, so let's kind of talk about first, like I said, what is negative inventory? So negative inventory is caused when a quantity of an item in inventory is negative. Okay, so how this happens is we sell more goods. So the number of goods, that quantity on hand, exceeds the number of goods quantity that has been purchased. Okay, so I'm going to kind of walk through this scenario when we get into our sample file, but I want to kind of just, higher level, at the end of the day, we're selling more than we've purchased. Okay, so let's hop into our sample file and let's talk about ways to prevent negative inventory. Okay, so first, I always like to start off talking about our company setup and our company preferences. So when you start a new company file inside of QuickBooks, or maybe we've changed our workflows, we've started a new division and we're going to do some different things, we need to make sure that our system is set up for us to be able to do what we need to do, report what we need to report, prevent what we need to prevent. So let's come over to our company settings and let's talk about ways to prevent negative inventory. So to get there, we're going to go to Edit, Preferences. We're going to choose our Company tab. Remember, Company tab is changes affect our full company file, where my preferences is when I log in, the preferences I want or don't want. And then we're going to choose the item in inventory. So you have all these different areas here that you can make changes to the company file. For today, we're going to talk about items in inventory. So you can see in the middle here that we have to talk about our warn if not enough inventory is to sell. So of course, we want to make sure that that box is checked. So we always want to be warned if there's not enough inventory to sell. And then it gives you some couple of options. When do you want the warning? So option 1, provide a notification when the quantity I want to sell exceeds the quantity on hand. And then option 2, provide a notification when the quantity I want to sell exceeds the quantity available. So remember, in QuickBooks, quantity on hand versus quantity available can be different. So let's walk through what I mean by that. So I'm going to close this out for a second. We're going to go over here to our Inventory Center, and we're going to look at our different inventory items. So Inventory Center gives us information about our actual inventory items. So we have over here the list of our active inventory items. And then over on the right side is details about each of the items. So if we start at the top, our widget 1, what this is showing us is we have 50 for our quantity on hand. So we would assume that means we have 50 in the warehouse at this time. The one below this says quantity on sales order is 0. So that tells us that we have not created any customer orders that we still need to fulfill. Quantity on purchase order means I do not have any purchase orders outstanding that I'm waiting to get inventory in to receive. And then, so that gives us down here our quantity available. So you can see our quantity available is the same as our quantity on hand because we have no outstanding customer sales orders. So let's come down to our next part, our widget 2, and we're going to see something a little different. So our quantity on hand equals 100. Quantity on sales order equals 25. So that means we have one or more sales order that equal a quantity of 25 for our widget 2 to be sold. And so our quantity available drops to 75. So this is very important when you think about if I'm a salesperson, I want to know what's available that I can still create customer orders. In this case, it's 75. 25 have already been set aside for customers that have already called in. Okay, so now let's go back to our company preferences and let's look at the final option. So back over here to edit preferences and our company tab. So our third option says don't allow negative quantity. So this means if we create an invoice for an inventory item quantity that we do not have in our accounting file, we cannot fulfill it. So let me show you what happens. So I'm going to choose that. And then we're going to come in here. And I'm going to come back. We saw at our inventory center, our widget 1, we had 50 available. So let's go and create a customer invoice. And let's say a customer calls and they want to order 75. So let's come in here and we're going to go to customer and we're going to create an invoice. Okay. So of course, first we want to choose our customer. We want to choose our item. So I'm going to choose the widget 1. Now we can see here this nice little graph here. This is really great for our salespeople to be able to see. This tells them, can they fulfill an order? So if we select that little graph, we can see information just like we saw in the inventory center of telling us how many we have on hand. And then that drives down into how many is available. Okay, so we know we have 50 available. So watch what happens when I enter in a quantity of 75. So if I enter 75, you're going to see when I hit the tab, it's going to pop up and say, stop. If I allowed you to create this transaction, it would cause my accounting file to have a negative 25. And I have selected to say, do not allow negative inventory. So you can see it removed my quantity. So if I enter in any quantity that is above what I have in stock, it is not going to allow me to create that transaction. Now I can enter the 50, and you see I don't have a pop-up. So it's very important that if you select this option of not allowing negative inventory, you know what's going to happen. Your team cannot create invoices for quantity above what you have on hand. And maybe that's what you want to do. Okay, so let's go ahead. I'm going to change that option back. So I'm going to clear this out. I'm going to close this. I'm going to come back to my preferences and I'm going to change it back to quantity to give me the warning when it exceeds the quantity available. The reason why I like this one is because, like I told you guys, quantity on hand versus quantity available can be different. And I want to know, as a salesperson entering sales orders, what I have available to sell. Okay, so let me hit OK. And then we're going to go through a scenario of a customer calls and they place an order for 50 widget 3s. So you can, of course, go through this. You can go through your home screen and create the sales order, or if you like your drop down, whichever one you prefer. So the first thing I want to do is I want to create a sales order. And I always recommend starting from a sales order because this is where inventory reporting starts when we talk about quantity on hand versus quantity available. Inside of QuickBooks, you can create an estimate, but if you are managing inventory, I recommend always changing and converting that estimate to a sales order because, again, That's where the reporting happens to be able to show what is available to be sold. And this is also going to help when we need to order. What do I need to order based on what is available? Okay, so let's create the transaction in a file. So I'm going to create a sales order. I want to choose my customer again. We said it's going to be for a widget 3, and we said that they want to order 50. Okay, now the first thing that you see pop up is it tells me I only have 5 available to sell. Okay, so that's our first kind of warning to say, hey, we can't fulfill this order. Okay, I'm going to hit OK. I'm going to save it. Now, when I save a sales order, this is what we call a non-posting transaction. This means that there is no financial impact when it's saved. I always tell clients, think of it as it's a contract between you and your customer for what the customer wants you to fulfill on their request. When we invoice the customer for this order, that is where the financial impact happens. So on an invoice, the invoice removes the quantity on hand, or credits, if we want to talk accounting terms, credits the inventory asset and takes that dollar cost and debits or increases our cost of goods sold for that item. And then, of course, on our P&L side, we increase income and accounts receivable. Okay, so I'm going to go through and I'm going to create an invoice for this order. And as you can see, it's telling me again, hey, wait, you don't have enough to fulfill this order. But remember, I'm showing you what not to do. So I want to walk through the scenario of I'm going to just pretend I don't see this, and I'm going to go ahead and invoice. So hit OK, and you're going to see it allowed me to invoice because I said just warn me. Okay, so when I save this, I've now had the financial impact. I reduced my quantity on hand by 50, but remember, I only had 5 on hand. So let's go look at our inventory reporting and see what the results are for this transaction. So there's a couple reports I want to show you. The first one is called our inventory valuation report. This report is going to show you all the active items in the file, what their quantity on hand is, and what their asset value is. So let's go run that report. It's report, inventory, and it's called inventory valuation. Okay, I'm going to make sure I created this on the 24th. Okay, I'm going to change my reporting date to the 30th just so that I have a little bit different. Okay, so we can see now in my file, I have 3 active items, widgets 1, 2, and 3. It shows us as of 4:30 what we have on hand. And if you look at our widget 3, we have negative 45. And remember, that's because we had 5 on hand and we invoiced a customer for 50, causing negative 45 for our quantity. This is another real big key factor here that I want you to think about. Not only did it cause me to have negative quantity, but it also caused me to have a negative value for that item. So if you take a step back and think about that, we don't have a true accounting of what our asset value is because we have this big negative 6,750. So we've reduced what our actual asset value is on our inventory that we have in the warehouse. Okay, so let's look at another report. This is called our negative inventory report. So if we go to, again, reports, inventory, and it's called negative inventory reporting. What this report is going to show you is that all the active and inactive, and I'm going to talk to you about that in a minute, items that have negative quantity. So this will kind of help you, what do I need to clean up? What is negative? And so this is kind of your guide to next steps of cleaning up. Okay, so to recap, when the above negative inventory was caused because a sales order was created, and we saw the pop-up saying we didn't have enough to fulfill the order, we didn't stop. We didn't stop and reach out to our inventory management team to say, hey, I know there's inventory in the warehouse to fulfill this, but my accounting file is showing we don't have enough. We need to make an adjustment. Or inventory management team, I have a customer that needs 50 widgets and we don't have them. Can you please order them for my customer? So we should always stop if our accounting file tells us we don't have enough so that we can do a step to make the corrections. Now we'll talk through the I can't stop. We'll talk through that scenario in just a minute, okay? So now I want to walk through, so we've talked about how negative inventory is caused, and we've gone through a transaction, and we've looked at the reports to identify negative inventory. So now what I want to do is show you how we can correct it. Okay, so just kind of looking through, we've got two options. We can do an inventory adjustment. I'm going to talk through that, or the issue of receiving team hasn't had a chance to receive. So we'll go through both of those. So first, let's use our widget 3 for the example. And let's say that we did have enough to fulfill that order. And now after fulfilling the order, our quantity on hand is 0. Okay, so we want to make an inventory adjustment to remove the negative 45 quantity and value, and we want to make it 0. Okay, so I'm going to come here to make an inventory adjustment that's found under our inventory area. So we've got inventory, adjust quantity, value on hand. And you can see here you've got some options that you need to set up. So adjustment type, you have 3 options. You have quantity, where I'm just adjusting the quantity. You've got value, is my quantity is correct, but my average cost needs to be adjusted, or quantity and total value. I always use quantity and total value because that allows me to see what both of them are and to make sure they're accurate. I'm going to choose quantity and total value. Your adjustment date is going to be based on one of 2 things. Either if you do cycle counts and you're kind of spot checking your inventory, you're going to date it the date that you do that count. Or sometimes we wait until month end to do a cleanup, and so we would date it month end. Okay, I'm going to leave it as 4/24 because that's the date that we created the invoice, just so we'll get it all cleaned up. And then your adjustment account. So this should be a cost of goods sold account. And sometimes we just leave it cost of goods sold, but a lot of times what I see on their chart of accounts is they actually have an inventory adjustment account so that they can track how many dollars are we having to write up. That's that kind of allows us to keep an eye on if we are constantly having to do inventory adjustments. We need to be able to stop and say something is going on with our process. If we are doing all the steps inside of QuickBooks correctly, we shouldn't constantly have inventory adjustments. So by creating an inventory adjustment on your cost of goods sold will allow you to keep an eye on that balance and allow you to kind of say, stop team, we need to review our workflow. Okay, so from here, we can either choose find and select. If you have multiple items, you can check, check, check. Or if you're just doing one like we were doing, you can type it in. So I'm just going to type in, it's our widget 3. You can see it pops up and it tells us what our current quantity on hand is, which is negative 45. And what we want to do is we want to make it 0. So I'm going to choose for new quantity and I'm going to enter 0. We're going to verify that our new value is also 0 because again, if we don't have quantity, we don't have a value. And so you can see down here, our total adjustment is saying move these dollars out of my inventory asset account and move those to my adjustment account that I chose cost of goods sold. So let's save that. And let's go look back at our reporting. So if we come back to our inventory evaluation, we're going to see that now our widget 3 is 0. That negative asset value is gone. So now we have this healthy $10,000 as our inventory valuation asset. Okay. So the last thing I want to show you guys is another thing that I've seen clients do as a mistake. So you see that we're left with this widget 4 as a negative quantity on hand. If we come over to our inventory evaluation, we don't see that widget 4 at all. Okay, I want to take you one step further and show you another issue that this causes. If we go to our balance sheet, and we'll run it as of the same date. So our balance sheet shows us that our inventory asset value is negative $5,000. But when we came over here, this report showed that it was a positive $10,000. So you can see that right now, our balance sheet and our detailed report for inventory, they don't tie together. And when you think about all of your sub-accounts on the balance sheet, so your open accounts receivable, your inventory asset, your open accounts payable, they should always have the same matching balance that your balance sheet has. If they don't, that tells you that something has been done that affects one or the other. In this case, what happened is the client saw that they had this negative widget here. We have a negative 100. And they said, you know what? We don't use this part any longer. We don't need this part any longer. And so what they've done is they've come over here to their item list and they've made that part inactive. Okay. So the reason why I tell you this is because even if you make an item inactive and it has a positive or negative quantity on hand, that does not get removed out of your file. It is still attached to your balance in your file. So I want to show you before, so I'm going to make it back active. Okay, so we can see our widget 4, we have a negative quantity. And when someone decided, I want to make it inactive because we no longer use that part, you're going to see this big pop-up. And it says, hold on, wait. You should not do this because you have a quantity on hand. So it gives you this big warning, but it does still allow you to do it. So when you make it inactive, even though it's inactive in the background, it's still part of your file. So let me show you at your inventory valuation, there's a little box that says show inactive inventory items. And when I click on that, you're going to see what happens. Guess what came back? Our widget 4. And now look at our asset value. We're at a negative 5,000. So it is very important that before you make an item inactive, that you make sure that you do that inventory adjustment to remove any quantity on hand. Okay? I was worried I was going to run out of time with you guys. I want to show you something really fast, and then I'll turn it over for questions. So the last scenario is that our sales team is working faster than our receiving team. And what I mean by that is that we have created an invoice because we need to get that item out the door. We're selling it. And we're saying that, I'm going to go ahead and delete this guy. And we're saying that we know they're going to receive it because we know we got it in stock. They just haven't had a chance. Okay. So in this scenario, we don't need to do an inventory adjustment. What we need to do is we need to receive the items the day before we invoice them. We can see that activity with what we call a quick report. So all list data have the options of a quick report. And the quick report is very simple. It's just a report that shows all activity of the items. Okay, so in this case, if we look at it, we can see we got a bill on 4/1 and we received 5. And then we invoiced our customer on 4/24 that caused that negative 50. So our receiving team needs to make sure they receive those 50 widgets the day before we invoiced on 4/23. This will correct the negative inventory and then it won't be in the file. So that's 2 options of how we correct our negative inventory. Okay, guys, so at the end of the day, our goal is to have a healthy accounting file. So we need to make sure we're keeping an eye on those quantity counts, as well as making sure our asset values are correct and tied to the balance sheet. So hopefully this helped you guys. It gave you a lot of information to help you keep that healthy file. I'm going to give you some homework. I want you to go and run that negative inventory report. See if you have any negative inventory report in your file. And if you do, reach out to us. Let us help you get it cleaned up. So thank you again, you guys, for joining me today. I appreciate it. Have a good rest of your week and reach out if you need any help. Thank you.